All right, guys. So today we got non-farm payrolls coming out. Big day, probably the biggest day of this week, really. Next week we got the actual Fed rate decision. Should be good. Let me know what you guys think. Yeah, so today we got non-farm payrolls, unemployment. I'm going to put the payroll expectations up. They're expecting a pretty light number. And, an interesting thing, though, that we saw earlier this week is we saw the non-farm employment change data show up. And it showed up way over the expected number. They expected like 110, and it ended up showing 250s or 230s or something like that. So it ended up showing much higher than expected, like much higher than expected, like over 100% more than expected. I think today they are expecting these numbers at so today they're expecting unemployment at 4.1%, non-farm payrolls at 106. So pretty low expectation number here. Unemployment, again, is expected at 4.1%. Does the economy show strength or weakness today? You can see this number here. I'm going to put some music up also. What's up, Beach? Theo. All right, we're here. Yeah, we got the SPY up right here on the right side. We got gold. We're looking at gold. I'm gonna put up. Actually, I might just keep these big. Yeah. Mic sounds way better. Yeah, so we just upped that. We upped the gain on it. The gain needed to be updated, so that's what we did. Hey, what's up, Beach? Yeah, I hope you guys were safe last night. Parabolic bull run native. Yeah, we'll see, bro. I hope so, dude. Honestly, this is the last week before the election, so I'm just ready for everything to finish, to be honest. Yeah, we had so many different things this week. Next week we got the Fed meeting, ISM services, some other stuff. And then I think the week after that is CPI week. Yeah, so usually CPI week almost always falls on the week of the somewhere between the 10th and the 15th of the month. Right, so if we look at November 11th through the 15th, CPI, yeah, CPI is going to be Wednesday, November 13th, and then PPI is going to be Thursday, and then Friday we ain't got nothing else. Friday we got retail sales. Okay, so we got some stuff going on. Yeah, I have no idea about gold. Group, no idea, bro. Gold currently sitting at 2760s, and I put a long-term chart up here. Here's a 10-minute chart. Not a long-term, but a longer-term chart. Gold hit highs a few days ago at at $2,800 an ounce. So, look at gold here, man. It hit highs of $28 an ounce. SPY up a little bit today also here. You can kind of see it at 570s right now. But here's gold. Gold dipped a little bit yesterday. So gold corrected some yesterday, and now it's kind of flat. Up a little bit this morning. Is AMD coming back? I'm not sure. AMD at 145s. Bitcoin at 70.5 thousand. Let me see if I can change the trading view theme. I would like to change this. The background, I don't want it to be white. I'd like it to be... Oh. Well, there it is. SPY. Hey, well, there it is. Alright, cool. Let me swap this old thing out. That's better, huh? I like this much better. I like the dark theme better. Dark theme looks cool. Apple's call. Well, you know, Apple's guidance was not as good as they wanted. That's one of the reasons. Like, if you look at the moment of time with Apple where it had this big pullback during the call, it basically pulled back like this because they mentioned their guidance going into like 2025, like certain aspects of it. I can't remember exactly what it was, but they said certain aspects of it were not going to be good. I think we have some earnings today too. Let me see. Yeah, we got Chevron, Exxon earnings that are already out this morning. Let's talk about it. Yeah, so Boeing is expected to make improved wage offer to striking factory workers. Is Exxon not out? So yeah, Apple said expect Q1 revenue growth at low to mid single digits. So this is what caused some drops here. All right, chat. So, yeah. You know what? I still want to figure out how to get AI hooked up with like. So yeah. So I see somebody asking a question here. Daniel says USA's population is nearly 350 million. If non-farm payrolls is only around 106,000 people, what are these so many other people working as? So you have it mixed up. So non-farm payroll data reflects the net change in employment in the U.S. for a specific month rather than the total number of employed people. So 106,000 represents how many jobs were added or lost across various sectors, excluding farming, government, private households, and nonprofits, right? So the total U.S. employment level is generally much higher, usually at about 150 to 160 million people actively working out of 350 million. So the NFP report tells us how many new jobs essentially have been created. So it's economic growth. And that's why payroll numbers are more important, because it shows essentially economic growth. Basically, how many people can use it, you know, how many people can use it, how many people's new jobs are added to the workforce, essentially. So a monthly NFP number of 106,000 means 106,000 more people were employed this month relative to last month, compared to last month. It's an indicator of job market health rather than total employment. Yeah. I don't know. I like Alphabet long term. Short term, the whole market I think is risky, but I like Google. I like Alphabet long term. I think it's a good company. Yeah, Intel shot up on BDPSB revenue. Kind of corrected down some here though. And again, the SPY's up pretty big too. We'll see if that holds. All right, guys. So, are you guys red or green so far this week? Is another good question to ask, I think, right? Are you guys red or green? We made a little bit of money on Top Step yesterday. So we got a little pop up here, but we'll see if the SPY starts to run ahead of these payroll reports. Yeah, I'm watching like Palantir. Palantir all the way back down to 42s. Could have been worse though. Yeah, so we got a little pop in the NASDAQ and the SPY here. Let me put up the QQQ. A slightly upward trending trend. Yeah, just to show you, we are trading a little bit on our challenge accounts here. So this is a combine account, so it's a little bit different, but we're trading on it right now. I'll put this up so you guys can watch me. There we go. Up 65. Chop this down a little bit so it moves in. There we go. All right, took half off there. You know, we get another one of these candle wick fills, bro. Like, look, so we have these candle wicks. And then it fills on the upside. Nice. All right, we're gonna go ahead and cut that there. I'll take it. What do we make? What did I make it on that specific trade? $60. I'll take it. I'm gonna short into this now too. Take the other direction. There's a little bit of a head and shoulder pattern, but I'm going to take one contract and start it off small. Alright, so we'll add to it, and then we'll just be really tight on the rest. I'm not going to add much more. Yeah, gold pulled back like a healthy amount yesterday. But it's up a lot anyway, so. Yeah, it's a big surge up. I'm probably going to have to get out of this. I don't think it's going to come back, so we'll wait. I need to just wait and attack some trends when we get some nice trends. But yeah, so here's Apple. Put this big chart up. Here's Apple right here. So Apple's still down from their earnings call yesterday. You know, they did their earnings report. They did their earnings call. They're still down significantly from it. Look, here's Apple's pre-market price action here. I know I'm trading a little bit too active here. I'm going to do this one contract, and then I'm just going to wait with just one contract here and see if we can get a move all the way back down to this level. So we're going to start taking just one contract early this morning. All right, so Chevron stock climbs after a triple beat on profit, revenue, and production. So Chevron, CVX up big. What about Exxon? So Exxon oil is up in general right now. Yeah, I'm not. So I see somebody posted on the Discord about some type of dare. You know, like I don't. Yeah, so NDX Medina, I see you talking about some type of dare short. Yeah, I mean, no offense to anybody, but I don't really pay attention to too much to what the chat pushes me to do. It's really difficult because there's so much variance. Like sometimes the chat will be like, "Hey, go long," and then it'll just drop 20%. Or then the chat will say, "Hey, go short." It's obviously a short, bro. And then the market just rips up and breaks highs. So like I learned a long time ago not to put too much weight. I also learned a long time ago that people in the chat will generally make multiple call outs. And if one's correct, they'll hyper-focus on the one call-out that was correct, and then they'll just kind of pretend the other ones were never said. I'm not saying that's you, but I guess the overarching point is that I kind of just ignore the chat's call-outs. No offense to you. And if you made a good call-out, congrats. Great job. But, it's not really anything that, yeah. Hope that makes sense. All right, so this little bitty one contract short position, we're going to take our $100 profit there and lock it in. You'll love to see it. Yeah. So that made all our money back, which is nice. I don't know what to do on the rest for today, but we're just sitting tight waiting. What's up, Britt? Yeah, I mean ER. I'm not gonna side with any politician, brother. Sorry, dude. Yeah, I mean, I don't mind those little trades where you're holding something for like a super extended period of time. All right, so the NFP report for today is. I gotta look back. Yeah, so we have the NFP report today, chat. We also have ISM manufacturing PMI later. So again, we have non-farm payrolls. All right, so it looks like me getting out of that. All right, so the U.S. labor market has demonstrated remarkable resilience over the past few months, setting the stage for today's eagerly anticipated NFP report for October, right? So this is a big report, a big relevant report. Yeah, so Kathy Woods buying Roku. Analysts forecast an addition of approximately 106,000 payrolls or jobs today, a figure that, while modest, reflects the economy's steadfastness amid recent challenges. So steady in August, the economy added 142,000 jobs, marking a steady increase from July. This growth occurred despite global economic uncertainties, underscoring the big robustness of the U.S. labor market. The unemployment rate held steady at 4.2%, indicating a stable employment environment. In September, it surpassed expectations. September witnessed a significant surge in employment with 254,000 jobs. Really a shocking number here. I'm going to short this pop up there too. Really a shocking number. 254,000 jobs. It was like 70, 80, 90% higher than expected. the highest in 6 months in September. And this growth far exceeded economists' expectations, as was accompanied by a decline in the unemployment rate to 4.1%. Notably, sectors such as food, healthcare, construction saw big gains, reflecting big broad-based economic expansion, according to the Bureau of Labor Statistics. Now, looking into October presented different challenges, including strikes in the aerospace manufacturing industry and the impacts of the different hurricanes that happened. These events were anticipated to slow non-farm payrolls, reduce them by as many as 41,000 jobs. But despite this, the labor market showed resilience. Private payrolls increased by 233,000 jobs, according to ADP National Employment Report a few days ago. So today's NFP report is expected to reflect the labor market's adaptability and strength, while the forecast for 106,000 jobs is lower than the previous months. And we're going to go ahead and take our profit in this little trade too, and it looks like just in time. But again, while the 106 expectation today is lower than previous months, it's important to consider the temporary factors influencing this figure. Unemployment is projected to remain at 4.1%, which again shows sustained stability in the labor market. Now, the labor market's performance has a lot of implications for economic policy, and with the rate decision next Thursday, the Federal Reserve is closely monitoring this data to inform its decisions on the interest rates that we might see next Thursday. Now, the robust job market growth in September and the anticipated steady figures for October suggest that the economy is on a solid footing, which might mean the Fed is going to be less likely to cut aggressively. As we wait for this, the labor market's recent performance offers a narrative of resilience and adaptability. What do you guys think? Vote on the poll. We asked so far, are you bullish or bearish on this report today? 63% are bullish, 37% are bearish. Let me do a countdown. I'm seeing I don't have a countdown going live yet. Let me do it. We got an hour, basically. We got 56 and a half minutes. All right. There is our timer. Let's see if I can put this up like right here. That's probably the best spot for it, so it doesn't block everything. What's up, wait? Unemployment rate will be higher at 4.2%. If non-par payroll goes down, I should short US dollar. It doesn't, not necessarily. I'm not telling you to short anything. Hey, nice trade, NDX. Hey man, much love. What was that sell-off yesterday all about? Earnings, mostly, G. So earnings happened for Apple and Amazon, and while most of the earnings were actually pretty positive, beats in margins, beats in revenue, good guidance for the most part, but tech, for whatever reason, just reacted negatively. Apple and Amazon both ended. Let me see. Apple red. What about Amazon? Amazon initially pushed up. So Amazon actually has very green. Amazon's breaking highs right now in pre-market. So if you look at Apple on the bottom, it's down, but Amazon right here is breaking highs. Just broke highs almost up to 200s. Now remember, Amazon lifetime highs are at 201. Amazon lifetime highs are at 201.20s. Chat, 201.20s for Amazon lifetime highs. So it's getting close. It's getting close. Yeah, so we're going to switch to our actual funded account, and we'll leave that up. We'll figure out what we want to do on the rest of this here. What happens is, like, I'm wondering what Amazon's going to do if Amazon breaks lifetime highs here. Amazon's up there. So we got a big little, or we got a pullback rejection here. so I'm watching the market right now. Amazon's getting really close to lifetime highs, and sometimes that level can be kind of like a magnet forming. So we just have to be careful with this. See if it rejects or holds or tries to break highs again. I'm watching Amazon very closely because, again, Amazon can act kind of like a magnet or Amazon has the potential to break lifetime highs this morning early in pre-market. So consolidation here. We did get into a couple green trades on my Combine account here. I'll show you guys this. So we're up 2 contracts now, but we just locked in. We're up about 130 net profit, like locked in already. I usually like shorting these down wicks. We just don't have too much movement right now, so we're trying to trade small, but the fills are bad and the movement's slow. 50 minutes left. Chat, 50 minutes left. We will cut this quickly though if it hopefully it goes in our favor and continues to fall down and the stock price continues to drop, or the share price continues to fall, but who knows, man. All right, that's a little bit better. I'm gonna go ahead and lock that in. I got a really good fill somehow here, but now I'm actually down on the last little contract. I'm gonna go ahead and get out the rest there. So we made money, not a ton though. Again, look at Apple, or I'm sorry, look at Amazon. Amazon's trying to break $200, which is like a big psychological level. The consensus is 106,000. The tilt shows 60% long for crude oil, or for gold 60% long, crude oil 63% long, NASDAQ 69% long, and S&P 70% long is what it shows. And it looks like me exiting my short was the right move there. And look at Amazon start to pop up, so we got a lot of upward price movement here. Hey, what's up, Mitch? Hey, shout out to my guy Mitch, man. Doing big things, bro. Happy for him, man. Mitch is on dude, I'm drawing a complete freaking blank. Mitch is on Trader TV on Tuesdays. Y'all go check him out, man. Hope you're doing good, brother. Yeah. Top 3 greatest thumbnails of all time ever in the world. Yeah, I went a different route. I was like, hey, I was talking to my thumbnail guy. And I was like, yo, make me cartoony, you know? And so I just decided to play around with the stream. Let me know which ones you like better. You like me, you like Big Head John or regular John? Yeah, y'all go give that man a subscribe. Subscribe to just Mitch's YouTube channel if you want. Follow him on Twitter. What's your Twitter handle, bro? I know it used to be Story Investor, but I think it changed. Let me see. What is it? It's Money Mitch. Money Mitch _TTP. Give that man a follow. A lot of good content he posts. Good trader in general, you know. You got a thumbnail guy? Yeah. Who's your worm guy? No, my Office. My family loves the Office show. Yeah. Yeah, I told him to make it cartoony. It's good though, right? Yeah, we got payrolls today. Honestly, payrolls are interesting too, because right now, this week is just crazy. Honestly, I'm not sure why they designed it this week, but every single major economic report, earnings report was this week, right? I've been busy constantly this week. Streaming earnings, streaming economic data. Next week's busy too. Next week we have the the rate decision, you know, and it's still pretty probable that we're going to cut 25 basis points. Again, somebody bet me yesterday that we weren't going to cut any more rates this year. So like next Thursday that we're essentially going to pause rates again. I disagree. You know, I disagree. And I could always be wrong, right? And these percentages have changed a little bit. They're at 93 to 7% right now, 93 to 7%. The way this would change, you know, and again, I kind of like, it's not that I made fun of the person that made that prediction. I just kind of looked at it like it could happen. It's just not super probable, right? Like it's possible for sure. Is it probable? Not really, but it could change. These numbers could change where we might see it change. So if you think we're not going to cut rates next Thursday, the scenario in which that would happen would be if today's payroll numbers came in shockingly high. Like if today's payroll numbers came in shockingly high and unemployment was low, you know, like so if unemployment came in at 4%, 3.9%, and payroll numbers showed up at 227%, right? That might be a scenario in which it's more probable that we're going to pause versus cut, less likely that we're going to cut, but still pretty probable. Like I think if even if payroll numbers showed up in that scenario that I just stated, where payrolls came in at 227, let's just call it, and unemployment showed up at like 4%, that would mean we have less of a need to cut rates, because what would high payrolls and low unemployment show? It would show a strong economy. Right, the Fed's going to cut rates if the economy's weak. If they need to cut rates, it's because the economy's weak. A weak economy benefits from lower interest rates, because when rates are low, people spend more, right? And when people spend more, they have cheaper access to money and leverage, and they buy things, and they spend in the economy, and it stimulates the economy by reducing rates, right? But we only should do that if the economy's weak. If the economy's not weak, the consequence is inflation, you know. And again, it's not going to be the inflation like we got post 2020 because of the quantitative easing, money printing, and all that stuff that happened. That certainly contributed to the inflation, as well as like stimulus checks and stuff like that. But it isn't going to make inflation better for sure. Cutting rates isn't going to make inflation better. Now look at the market rip. So market's running up. NASDAQ just broke highs heading into this report. We got 45 minutes left. But even still, so even if payroll numbers come in high and unemployment comes in low, I just think we're going to see a little bit of a change in the percentages. I think it might change to like 35-65 or 70-30. It's still more likely that we're going to cut rates, because I think the Fed's kind of dead set on cutting rates. But, you know, it definitely makes it a little bit closer. What do you guys think they're going to do next Wednesday? Do you think they're going to cut rates? Do you think they're going to pause? Basically, the only two outcomes are 25 basis points right now, and a 25 basis point cut and a pause. Yeah, I don't know, Mitch. I don't know if they're going to do 50. I think it depends on what we look at. Like 50 would certainly do more to help real estate right now. And I just bought a rental property, and so honestly, I would love it if they cut 50 basis points. Why does me having a rental property influence how much I want them to cut rates? Because, you know, we're in the fall months now, but if they cut rates, there's about a 3 to 6 month lag until it hits like mortgages and auto loans and stuff like that. And so if we cut 50 now and we continue to cut rates aggressively, what that means is by next spring, when the real estate market's starting to pop off, rates might be low, and it might like start another bull run in real estate. Now, I don't know if that's going to happen. I think they're going to be a little bit more conservative with their rates because I think like we've had a lot of inflation worries over the past 3 or 4 years. So I just think they're going to be a little bit more conservative with their rates, with how much they cut rates. But I wouldn't necessarily be against it if they did 50. I don't know if they're going to, but like I'm okay with that. If they did 50, I'd be all right with that. Right now, though, according to this, it's pretty probable for 25. You know, so we'll see. Big pullback right now. Look at this big old dip in markets. They don't care to pay interest. They print money or use your money. Yeah, no, I was explaining it to my wife. So like the way these banks manage your money is pretty easy to understand, right? And so they might say a bank has a CD, a certified deposit, and they pay you, you know, let's call it 4% on that CD, right? Annualized, of course, like whether you hold it for 6 months, if it was a 6 month 4% annualized yield, then you would just divide whatever the yield is by 2 and get the number. So if it's a 4% yield, you make $2,000, or you get 2% over 6 months, if that makes sense. But the point is, what the banks do is the banks take your money and they invest it long term, where they're probably earning anywhere between 8 and 12% a year from your money long term, right? But it's never guaranteed, but they're taking your money and investing it, and they're earning anywhere between 8 and 12% off of it, and then they're taking it and they're paying you 4%. Or whatever they pay you for a certified deposit or whatever. It's the same thing the government's doing with bonds, right? Like, it's the same exact thing. They're taking your money. They're earning 8 to 10%, 12% in some ways. The last few years, 20% in the S&P and the NASDAQ. And then they're paying you your little 3, 4, 5%, and they're profiting the difference. That's what banks do. That's what the government does, right? And you can't even knock them for it because it makes sense, because they're taking on the risk of holding that. But short term, but long term, there's not much risks. Like investing in the S&P and the NASDAQ and the Dow, those things are gonna go up over time, right? So like they're gonna earn you 10% on average long term. And when I say long term, I mean like 15 years plus. And so they have time, and if they have time, they can make their money, and that's essentially what they're doing. The real reason most of the public can't do the same thing is just discipline related. Like most people invest in stocks, and if they make a little 5-6% investing, they take their profit and they get out of the stock, right? Where the real way to earn money in stocks long term, in my opinion, is to never sell, right? You can build generational wealth. You buy the NASDAQ, you buy the S&P, or you buy like the healthiest blue chips in the world. If you want to get in at good times, you can, dollar cost average if you're worried about it. But you just sit on those things forever, man. You just never sell. If they pay dividends, you're going to make your investment back, probably through at least some dividend payments. But they're going to go up over time, and the compounding effect is powerful, right? Like you see companies, people that bought Apple or Amazon a long time ago probably recognize it. But there's also risks, and if you want to get past those risks, I think you got to just go with index funds. Diversify into index funds. Gold's pretty good. Real estate investment trusts. Hey, guys. Y'all in here early? Oh, all right. All right, guys, I'm back. All right, buddy. I love you, man. Have a good day, bud. I love you. Hey, Carol, did you talk to Jack's teacher? Okay. All right, guys. Sorry, had to say goodbye to the fam here. All right. Let me check back on chat. What you guys doing over here? All right. Apple down, news not talking about it. Yeah, so they did bad. They thought one of the reasons they're down, the CFO says they expect Q1 revenue growth at low to mid single digits. Yeah, I think that lowered the expectations some with Apple in terms of Q1 revenue growth, which is going to be the next quarter. Yeah, so I think that's what's going on with Apple. That's where we saw the big drop yesterday and after their earnings call. But Amazon's getting ready to break lifetime highs if it continues to push up. Amazon lifetime highs are right above us at 201s. Look at the 200 EMA on the NASDAQ here. People wonder why I watch the 200 EMA. Look at this thing. It's literally right here. Big pullback down to the 200 EMA. Big bounce back here. So that 200 EMA is just a powerful, powerful spot. Yeah, for sure, Mitch. That makes sense as well. Yeah, it's possible for sure. And again, like I always I'm top 3 worst day trader of all time ever in the world, right? You guys know this. But I love investing, and I think the way you invest is you find, like, everybody wants to short the biggest companies in the world, but I think that's risky. I think, you know, I think most of the time the biggest companies in the world are going to stay the biggest companies in the world, with a couple exceptions. But the Magnificent Seven stocks are generally pretty safe long term, I would assume. But again, if you really want to be safe, NASDAQ, Dow, Russell, not the Russell. Let me exclude the Russell. S&P, NASDAQ, Dow. You know, dollar cost into those over time, you should earn at least 8% a year on average over a long term. You know, if you really want safe, you can always buy treasury bonds. You can buy treasury bond ETFs like T-bill, TBIL. TBIL pays you a yield, pays you what a treasury bill, a short-term treasury bill, I'm pretty sure. Yeah, so a 3-month treasury bill, if you buy TBIL, which is an ETF, it'll pay you a monthly dividend based off of the current yield of 3-month treasury bills, right? So if the current yield is 5% for 3-month bills, it'll pay you 5% divided by 12, which is 0.42% a month based off of your position. If you buy 50K, it'll pay you 21,000. No, wait, that's wrong. What did I do here? I missed a decimal. So if you buy 50K, I still think I missed a decimal. Hold on. This is right. It'll pay you $210 a month. Yeah, so I needed to put a couple of zeros in front of it to make it a percentage. But yeah, it would be $210 a month in dividend payments. As an example, right? And those are a lot of ways. Like, there's a lot of ways to hedge against stuff. Real estate's great. I like real estate personally, residential real estate. I don't like commercial real estate at all right now. Commercial I think is going to continue to be risky moving forward, but I also think there's a lot of discounts you could find in commercial, right? Like, there's some discounts you can find in commercial just because it's so weak. But I love residential real estate because, you know, no matter what happens, right? Like, you buy a $300,000 rental property, you're going to earn about 4% a year on that property, right? So you're going to earn about 4% a year. In terms of just general appreciation, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. In 10 years, that property is going to appreciate $144,000 in profit and in appreciation. Not only that, but you're also going to earn cash flow on top of it. And so if you use the 1% rule, you'll make about $3K a month. You know, $36,000 a year. Let's take half of that off for insurance expenses and stuff. You're still going to earn $18,000 cash flow per year. Over the same period, you're going to earn 180 plus 144, and you're going to earn, you're going to basically double your money in 10 years. And not only that, but your rent is going to go up over time as your house appreciates as well. So I think there's just a lot of ways to, like, I think real estate is one of the best inflation hedges, you know. You know, I was talking to my wife. My wife was looking at, what if somebody came to her and asked about buying a bar in California? And like I told her, I was like, we did the numbers on it. The bar is going to pay you about 10% a year. But at what headache? Like, to what extent of a headache are you going to get from having to run that bar at making 10% a year? Right? 10% is 10% a year on that bar worth the stress that bar is going to give you? Right? Like, you could do a lot of other stuff to earn 10% a year on average. That's going to be much less stressful than buying a bar, much less risky as well. So, you know, your job is to keep up with inflation. But so they don't start school now this early. They're coming in because usually they usually leave at 8:30 market time. And so one of the things that's been happening the last week is that they've been coming in here 3 minutes, 2 minutes before economic data comes out. And they've been wanting me to pause my stream and mute myself and basically have silence for the 3 minutes preceding the topic of the stream in general, right? And so what I told them was that they can't, I told my wife, I was like, look, you can't come in 5 minutes before economic data comes out. Like, you either got to come in much earlier or much later. And so today they decided to come in much earlier, which I thank them for, because, and you guys should thank them as well, because frankly, now I don't have to pause it leading up to economic data. Yeah, so many people say, hey, how are you buying right now in pre-market? First of all, I'm trading futures. But you can also buy, I love pre-market trading in stocks. I think some pre-market ranges are some of the most obvious ranges, right? Like once the volatility of the opening bell kicks in, it can get a little variance heavy, but ranges in pre-market can be powerful in stocks. They really can. Some of the most predictable things. Do you think the data is guaranteed to be positive? No, nothing's guaranteed. Nothing's definitive. Nobody freaking knows what it's going to do, if it's going to come up, down, or sideways. You know, generally we can look at the prelim payroll numbers from the non-farm employment change data that came out on Wednesday, and on Wednesday it showed much higher numbers than expected. They expected 110. I think they showed up at 230 or something like that for on Wednesday. So much higher than expected report for the non-farm employment change, but there's not always a correlation. So sometimes you see the prelim payroll data, the employment change data, show up way higher than expected for payrolls or employment changes, and then you see the payroll numbers and it's actually lower than expected. So there's not always a correlation, but we can look at the non-farm employment data that came out last week, or that came out this past Wednesday. It came in at 233,000 versus 113,000. So this was the employment change data. So like, look at this, kind of crazy. Like, look at this number. So these were the non-farm employment change numbers, 233,000 versus 113,000 expected. So, yeah. If you look back historically, whenever we sell into NFP, we always rally on the data. Always is a sketchy word in markets and finance, brother. Always, nothing always happens. We get a lot of stuff that could happen that, you know, always is a sketchy word. So you just want to be careful saying always, because nothing's always anything, you know. All right, so I'm going to short this in the futures market, take 2 contracts short, see if we can ride this down to the 200 EMA right here. We still got 30 minutes left until the payroll data comes out, and so we still got some time, and we're already up hundreds on the day already, so we're already got a nice little cushion here. So we'll add up to 3 or 4 contracts if we need to. I hope we don't need to, and I hope we can just ride this down. There we go. There we go. We're going to take half of that off. Again, we're just going to go ahead and get out the rest. The job is to ride it down to the 200 EMA right here, and we're basically at that spot. So we're just going to lock that in. We're now up close to 300. Yeah, so the main difference... Hold on. So the main difference between this is that NFP is monthly net change in number of jobs, where non-farm employment represents the total number of jobs in the non-farm sector. And so NFP is used to describe the monthly change in the number of jobs across different sectors, excluding farming, government, private households, and nonprofit. So when the NFP report says 106,000 jobs are added, it means that 106K new jobs were created, net increase in the non-farm sectors compared to the previous month. Now, for non-farm employment, it refers to the total number of jobs within the non-farm sectors at any given time. And so if the non-farm employment level is 160 million, it means there are 160 million people employed in these sectors in the U.S. But let me see. Now, obviously, all right, so anyways, the ADP, I'm using AI, but it says the ADP National Employment is a monthly publication that estimates the change in non-farm private sector employment. It's based on analyzing payroll data from 25 million U.S. employees. So the ADP report focuses solely on private sector employment and does not include government jobs. While it offers a timely snapshot of employment trends, its figures can differ from the official data released by the Bureau of Labor Statistics today, the Nonfarm Payroll report, which includes both private and public sector employment. For instance, the BLS's Nonfarm Payroll report today provides a broader view of employment changes across various sectors, including government positions. The ADP report is often viewed as a precursor. That's why I call it prelim data to the BLS's payroll report, offering insights into employment trends. However, discrepancies between the two can occur due to differences in the sources and methodologies. So yeah, ADP National Employment Report provides valuable info on private sector employment changes. And the payroll report includes both private and public, which I think is what you said in the first place. But yeah. All right. NFP is nothing but gambling shielded by technical analysis. What? I mean, maybe if you said trading NFP is nothing but gambling, but like NFP reports just jobs data, brother. You know, I don't think you should day trade in that regard. In the context you're using it, Stoic, everything is that. Every economic report is that. CPI, PPI, jobless claims, retail sales, freaking Jerome Powell meetings. It's all volatile. Like, you shouldn't really front load into anything based off of these reports. There's no edge. There's so much variance with this type of stuff. Like, CPI can come in super high and the market can tank. CPI can come in super low and the market can tank. Retail sales can show up super high and the market can tank. They can show up super low and the market can tank. PCE data is the same way. And so you really, earnings are especially like this. And you see this a lot with this last earnings season. Meta, BDPSB revenue, good guidance, fell. AMD, BDPSB revenue, good guidance, fell. Amazon, BDPSB revenue, good guidance, breaking highs this morning. Apple, BDPSB revenue, good guidance, fell. And so there's no real predictability there. The only people that are taking these huge positions based off of these, a lot of them are options traders, and that's even more of a gamble. And I've known a lot of people that have struggled with options on these earnings reports for whatever reason. You know, I knew a guy who used to come on the stream. It's not Mitch. Mitch, I don't think does this. So, not talking about you, Mitch. Different person, for sure. But he used to come on the stream and he would take these big, gambly options positions. And sometimes he would make like 50%, and then he would consequently come to the stream acting like it was easy to make 50%, when really he's risking his whole account to do this, right? Like, that's what happens when you're taking these big positions. And so if I took a small trade where I made like $50, $100 or whatever, he'd be like, oh, he would scoff at it and almost like make fun of it. And then pretty quickly, and got really toxic with it. And then before you knew it, his whole account was gone. And he was like all depressed and sad because his whole account was gone. And it really does go to show that like not everybody should day trade. Not everybody should day trade stocks. Not everybody should trade options, especially. And I don't think anybody should take huge positions ahead of earnings reports unless you're planning to hold whatever it is long term. And that's not usually options. And so just be smart, guys. Trade small. Understand the risk that you take in stuff like this. You know. Amazon would have went up Yeah, I mean, most stocks are going to go up leading into the election. On election years, I think it's something like 80% of the time the stock market goes up leading into the election. So it's pretty probable we're going to have bullish action as well. It's one of the reasons, like, I see a lot of people predicting crashes. And I'm not knocking them for predicting crashes, but, like, the reality of it is if you're trying to predict a crash during an election year, you're trading against the odds, right? Like, most of the time markets go up leading into the elections, and it's pretty consistent. It's 80% usually or something like that. And so if you're trying to predict a crash leading up to that, it's pretty improbable. Not saying it can't happen. There's always outliers and variants, but yeah. Hey, nice Mitch. Good trade, bro. Yeah, for sure. Yeah, no, good trade. Yeah, I think that's a really smart move, though, Mitch. It's something I talk about a lot, where I try to build up a cushion on the day first. And especially if you build, like, I think what you're talking about is sometimes what I'll do is I'll get into a position. And if I'm very green on that position, then I'm okay with adding to it, right? And that way, if I add to it and it turns against me, I'm still okay. I'm not underwater, right? But if it goes in my favor, I have a much larger trade, and I think that's perfectly fine and acceptable. I think it's okay if you're green in something to risk the profit to potentially make more profit. And that way, if it goes south on you, you're not underwater, you're flat because you were already green to begin with, if that makes sense. I think that's a really smart way to approach trades in general. I also think if you do that if you do that over and over again consistently, you'll have big wins and small losses. All right, guys, we got 700 people here. I'm going to hit it in sub-only mode, guys. So if you have not already subscribed, hit the notification bell. I appreciate the love. Do it now. Subscribe one time. Might feel good. We got 23 minutes left. 23 minutes left. Bro, I don't give financial advice, Daniel. I don't even know what financial advice is. I'm not an investment professional. Remember, I am terrible and have no idea what I'm talking about, guys. Don't copy me. I'm not an investment professional. I'm not liable if you lose. You always got to make your own assessment, trade responsibly. Understand CFTC 4.41, hypothetical or simulated performance have limitations, guys. If NFP data green index go up or down. What? If NFD, you mean if non-farm payroll data is higher than expected, does the market go up or down? Nobody knows. You could fear either one. Super high payroll numbers, you could fear inflation, and it also means it's less likely for the Fed to cut rates, which means less economic stimulation over the next year. Or you could look at it as opposed to higher payroll number signals a stronger economy, and that's generally better, right? So either way you look at it, it could be good or bad. Depends on whether you fear inflation more or economic weakness more. Okay, I'm not telling you to gamble. I'm not, not an investment professional, not liable. Nothing we say here is investment advice. Always make your own assessment, trade smart, guys. Yeah, so many factors at play. What if the data comes in negative? I mean, again, nobody knows. Nobody knows how the market's going to respond to this, guys. Genuinely, nobody knows. Again, data can come in negative. Payroll data can come in low, and the market can go up. Payroll data can come in low and the market can go down. What the payroll and unemployment data is gauging is economic strength or weakness. Labor market strength or weakness is really, like, if you want to zone into it, labor market strength or weakness. And that could be good or bad, right? Higher payroll numbers shows economic strength. Lower payroll numbers shows economic weakness. Lower unemployment shows economic strength. Higher unemployment shows economic weakness. And payroll numbers are typically more influential than unemployment numbers are, though. So generally, payroll numbers have more weight, have more influence over markets than unemployment does. But unemployment is still very important, especially when, like, it's especially when some of the economic risk triggers have happened over the SOM rule happened, I think, not that long ago, where unemployment spiked or went up 0.5% relative to where it was, and that triggered the SOM rule. Although SOM herself said that she didn't think it was a valid trigger, and we haven't really seen GDP weakness like we would need if we were going to enter a recession. But GDP did drop. It was at 2.8%, so it was a little bit lower. It did show up a little bit lower. Yeah, I'm in the U.S. Why the last few months, the first week of the month, we're going down, down, down. I don't know. If Jerome Powell walks outside tomorrow and stumps his big toe on his right foot, how much will he cut rates? I don't know. I don't know. Do you think NFP data will be above the forecast or not? I don't know. I'm not really. Y'all aren't going to get a prediction from me on payroll data because I think it's so variance heavy. Yeah. Love the new thumbnails. Keep up the amazing work. How's BJJ? It's fun, man. BJJ's fun. I have a friend that's going to be competing next month, and we've been helping him train. He's gotten so good at ankle locks on single leg X and like inverting and ankle locks. He's got the strongest ankle lock I've ever run into. Usually, I'm okay with ankle locks. Heel hooks are what get me in trouble, but his ankle lock, he does this thing where he blades his arm. Freaking calf and ankle hurt. But he's getting better. He's getting good. All right, guys. 20 minutes left. 20 minutes left. We got about 800 people watching. Are y'all bullish or bearish? Are y'all buying or selling today, guys? Let me know in chat. What do you guys think? Kurt Angle's ankle lock? Nah. Yeah, I almost hurt him the other day, though. I feel kind of bad, man. Where him and I were training, and like I ended up passing and getting into mount, and he had already ankle locked me a couple times that day, you know. But I got into mount, and I tried to Americana him a couple times, and he escaped the Americana, right? So this third time I got him in Americana, I had to try to be quick with it, and I think I went a little bit too quick, and I heard a pop, like a pop in his shoulder, and so I immediately let it go, and he, you know, he was hurt for a little while, and hopefully I didn't hurt him too bad, but he was fine. He said he was okay afterwards, and we actually rolled again, and he ankle locked me again afterwards, but like still, I feel bad because he's training for a competition and stuff. I could do these competitions, you know, if I did a competition, I would be in the Masters division, which means I would be rolling against white belts 30 years old or older, you know. I think I would do well against them. Just because I have that, it would be the master division, which, you know, I don't want to go against the 18 to 29-year-olds because they're just a bunch of juiced up monsters. But I'm okay with rolling against 30-year-old white belts, you know. But again, I'm still not going to do it, but still. Yeah, there's a timer. It's right here. NFP is non-farm payrolls. So it is, NFPs are basically how many new jobs are showing up. So non-farm payrolls is the monthly change of the number of jobs across various sectors, excluding farming, government, and private households and nonprofits. So if it's expected at 106,000 today. So when it says 106,000, if it shows 106 today, it means that 106,000 new jobs were created. So it's the net increase in the non-farm sectors compared to the previous month. So non-farm just means not farming, government, private households, or nonprofits, right? Like normal jobs, normal payrolls, and normal jobs. And so again, it's expected at 106. If it shows 106, that means new jobs created. Yeah, Jay, way too controversial regarding overseas stuff. Not going to answer that. Not going to even get into that. Too political in nature. AMC has earnings next week as well, guys. So AMC does have earnings. All right, guys, we got 14 minutes left. 14 minutes. Payroll data coming live soon. We'll see if we can break 2,000 people live like we did last time for payroll report. It is the day after Halloween. I hope you guys stayed safe last night. Yeah, I don't know. Rudy says, why is the forecast so low with only 113K? I'm not sure. Last time we showed up at like 260s as well. So last time we showed up much higher. Much higher. What is your assumption on it? I don't know. I don't know what we're going to get, Jay. Generally speaking, like we could look at what the last payroll report showed. If that helps, like I can delve into what happened last time for payrolls. And let me see. When was the last payroll report? All right, so it was released Friday, October 4th at 8:30. So let's take a look at markets on that date here. So here's the QQQ. And last time they showed up much higher than expected, right? So 17th, 15th, 14th, 9, 8, 7, 6. Wait. Yeah, October 4th. So here is where they showed up as. And again, it looks like when the payroll report showed up, yeah. So here is where the payroll report showed up right here. You see this. So last time payroll numbers came in much higher than expected and the market flew. So here's where the last payroll report showed up right here. And you can kind of see how much the market reacted, how positive the market reacted to that last payroll report. Look at that big old increase here. Again, it shot up, and understandably so. Last time payroll showed up at like what, 260 something. Let me see. So the last time payroll showed up, 254,000 jobs, unemployment of 4.1%, and they only expected. So they only expected 140,000 jobs. So last time they showed up at 100 or at 250s versus 140 expected. So last time they showed up way higher than expected. And the market flew. You can kind of see how positively the market reacted to this report last time. So again, last time higher than expected signaled strength in markets. But I'm not saying that's what's going to happen this time. I really don't know. You know, another thing to watch, Amazon teetering around highs of the lifetime highs. So Amazon getting close. Market's pretty flat though leading into this report. Pretty neutral market leading into this report. Yeah, if you spam, I'm gonna ban you. Spam, get banned. Yeah, we're gonna put you in timeout. Sit in the corner and think about what you've done. How dare you spam us here? No, I'm just joking, but seriously, you're in timeout. All right, guys. It's going to be like 116,000. What? Give me your number. What number do you think payroll numbers are going to show up as today, chat? We got 10 minutes left. This timer's a little bit off. I'm going to fix it. This timer's a little bit off. I'm going to fix it. Yeah, that'll be good. All right, so we got 9.5 minutes left, chat. 9.5 minutes left. 125, 120, 118. Playing Amazon calls into earnings, 200 plus. Yeah, I mean, the prelim payroll data, the non-farm employment change data showed up at like 230s versus 110 expected on Wednesday. They're not quite prelim data. They're just, you know, they're non-farm employment change data, but still, it's a relevant thing. And so the ones that showed up on Wednesday were much higher than expected, much higher. So interesting question today is what happens with these. Yeah. So last time they showed up at 233,000 for non-farm, the ADP non-farm employment change. 110 expected, 233 showed up, so over 100% larger than expected. Last time it showed up at 159K for that number. So The non-farm employment data was much higher than expected. We also have ISM manufacturing PMI later on today at 10 a.m. So we're going to cover that also. But last time the payroll data for non-farm payrolls showed up at 254. Today they're expecting 106. Private payroll showed up at 223,000. Today they're expecting 90K. So universally, they're mostly expecting dips in these numbers. It doesn't mean that's going to happen, but that's what they're expecting. Unemployment drops simultaneously with payrolls today in about 8 minutes. And again, they are expecting unemployment at 4.1%. We also have manufacturing PMI data expected at 47.8 at 9:45, and then ISM manufacturing data is expected at 47.6 as well. So a lot of data drops today. They could actually be lower. The national disasters we have might have disrupted the payroll numbers. Plausible. Hey, thanks, Mitch. Appreciate you joining us, bro. We'll have to get you on the stream again sometime soon, man. Should make a meme token, John with hat. Nah, bro, I'm not into making cryptos, you know. I'm living my life. I'm happy, you know. I'm just gonna avoid that realm for now. If you use my link, you'll get the $49 discount, Willie. If you want to check out Top Step, there's the link. Great way to learn how to day trade. Almost all day traders lose. Doesn't matter what course you take, who you follow, what mentor you have. Most day traders lose. Now, you could fund yourself and probably lose everything that you fund, or you could try a funded account program, something I deeply wish I had in the beginning. Most pro day traders trade futures. You can day trade the S&P, the NASDAQ, the Dow, the Russell, gold. Some currencies patterns are super similar to blue chip stock day trading patterns, but there's no PDT restrictions in futures. And what Top Step does is the most legit one in the world. They give you a demo, test your skill with it. If you pass the test, they fund you. If you fail, you only lose the monthly subscription. In this case, the base one is $49. If you pass it, you get $50K in funding with a 90% split. And this is a beautiful middle ground of pressure where it teaches you how to trade. It's kind of like a souped up demo account. If you were paying for a demo account with real-time data, it's going to cost about the same as Top Step. So the value's there, but it's kind of gives you a little bit extra. If you win, you get funded and you can potentially make money from it. And so there's a lot of cool stuff about it. If you want to check it out, the Top Step X has 0 commissions as well. It also has this cool little tilt indicator. There's just a lot of cool stuff that it offers. But yeah, if you want to check it out, here's the link. They are an affiliate of mine. I'm biased. They pay me money. I'm biased. Top 3 most biased ever. So understand CFTC 4.41, hypothetical or simulated performance have limitations, guys. All right, let's go. We got 6 minutes left, chat. 6 minutes left. Very flat, choppy markets right now. The NASDAQ. Yeah, so the NASDAQ at 486.70s, 486.70s. Amazon at 199. Basically $200. Lifetime highs for Amazon are right over 201 at like 201.20s. 201.20s. Yeah, I don't know why. AB, I'm not sure, bro. Why don't you cover crypto miners? I mean, we do. We cover like Riot and Mara. They've just lost some interest over time, but we cover them. All right, chat. 5 minutes. 5 minutes. We got 1,300 people here. Thanks so much. Let me, yeah, we put it in sub only mode. There we go. Payroll data today, guys. Be ready. I'm probably going to take some positions after the payroll numbers. Wait for these data releases to happen. We've made some money today. Like, here's my P&L so far this morning. So we've gotten some good trades in. The good thing about Top Step X, 0 commissions. Look at that, 0 commissions. Here we go. 4.5 minutes left. Yeah, the thing about gold, like, I like gold, but gold's on a decade-long uptrend, 8-year uptrend. You know, gold can downtrend for half a decade as well, so it's not my favorite time to buy gold. I want to buy gold when it's down, not up, over a long period of time. Like, if gold drops for 3 or 4 years, that's when I want to buy gold, versus gold going up over and over again every year for 8 years straight. That's just not my favorite time to buy gold, unfortunately. I think long-term it's not going to matter. Like, long-term gold's probably going to go up regardless. Short-term risky, in my opinion. And again, I might be wildly wrong. What do I know? Top 3 worst gold investors in the world right now. Well, yeah, you can't hold anything overnight, Wilfredo, so if you held something overnight, you know, it doesn't matter. You lost. It's a day trading challenge. Why always the top 3 worst? I don't know. I'm top 3 most worst ever saying traders in the world right now. A 5-decade cup and handle. Yeah. Gold top 3 shiny rocks in the world right now. The problem with gold is that it really is just a shiny rock. You know, like people say, oh, if the stuff hits the fan and like civilization changes as we know it, gold's gonna be the real currency. It's like, yeah, but gold's just a shiny rock. You know, like, what are you going to do with gold? It has no utility in that instance. Zero to utility in that case. Not zero. You can use it some for technology, but it's still, like, there's a difference, right? Like, in that situation, food, shelter, tools are going to be more valuable than a shiny rock. And that's where I think a lot of people get it wrong. But I like gold long term. I don't think any of that's going to happen anyway. And so I think long term gold's still a pretty good bet. Short term, it's risky. Right, exactly, Trade Life. Are we going to be shaving off gold pieces? Probably not. Food's going to be much more valuable. All right, guys, look at this big old drop in markets right now. Payroll data drops in 2 minutes, chat, 2 minutes. Be ready here, guys, be ready. Payroll data expected at 106,000, 106K. Drops in 2 minutes. Look at this big old drop. I don't know what's going on right now in markets, but it's not the payroll data out. Yeah, I mean, but Ty, listen. Number one, nobody freaking knows. All we can do is speculate. And so nobody knows. Number two, we'll talk about it after payroll data comes out. We're not talking about economic hardships, brother. That's a completely different thing. Sure, in periods of economic uncertainty, sure, gold is a great investment. I agree with that. But that's not what we're talking about here. Anyways, payroll numbers. Chat drops in 2 minutes. Look at the market dump a little bit here, guys. So again, the U.S. labor market has demonstrated big resilience over the last few months, setting the stage for today's payroll report. October of 2024 is what they're looking at. It forecasts 106,000 new jobs, a figure that, while modest, reflects the steadfastness and recent changes in the economy. In August, the economy added 142,000 jobs. In September, it added 254,000 jobs. We got less than a minute now. Now we're looking at October, and they're expecting 106,000 jobs. A big dip relative to what they could have been. Guys, 30 seconds here, chat. 30 seconds. It's time. All right, guys, 20 seconds, 20 seconds. Ten seconds, chat, 10 seconds. Here we go. This timer's a little bit early. We still have 5 seconds, or really 1 second. And here's the report. It drops now. Non-farm payrolls, 12,000 non-farm payrolls. I see 12K, is that right? Only 12,000 jobs versus 106,000 expected. Only 12,000 jobs versus 106,000. Unemployment showed flat at 4.1%. I'm showing only 12,000 jobs added versus 106,000 jobs expected. Now, what this means is that we're more likely to cut rates aggressively. This is a very weak payroll number at 12,000 versus 106,000 expected. 12,000 jobs versus 106,000 expected. 4.1% unemployment and 12,000 jobs. Very weak payroll numbers. Very weak. Only 12K. Unemployment showed flat, but payroll numbers showed 12,000 versus 113,000 expected. And this is why I was trying to tell people there's sometimes a big discrepancy between the non-farm employment change numbers and the payroll numbers. Non-farm employment showed much higher than expected. This showed 12K jobs, a tiny amount. And honestly, the market hasn't really reacted super negatively to this report. Yeah, so the hurricane is a very good explanation for this. A lot of natural disasters happen, and so that influenced these jobs numbers. But yeah, market dipped a little bit on this report, but hasn't really moved that much, to be honest here. This is not a big report. We also have ISM manufacturing PMI data coming out. We still got about 2,200 people watching. So thanks so much, guys. Make sure to hit that subscribe button. Help support the stream. You know, hopefully you're not too emotional, regardless of whether we agree or disagree about things. You know, people tend to be really hyper emotional about stuff. But if you haven't already, subscribe. Hit the notification bell, guys. Payroll numbers, much lower than expected, guys. Noticeably lower than expected. Some would argue a shocking amount lower than expected here. So 12K versus 106,000 expected. Much lower number. And honestly, the market's kind of going up on this report. What this will mean is that we're much more likely to cut rates next Thursday. So this basically means a rate cut is almost but inevitable. So like, look, so we can look at this, refresh this. 91% chance, but again, a rate cut's pretty probable. Yeah, so a rate cut's pretty probable now. Yeah, honestly, we kind of needed a weaker job report. It means the Fed's going to cut rates. It's better for my rental property, I'll say that, even though I think we have to worry about the inflation concerns of stimulating the economy in that regard. But I think maybe the inflation concerns triggered, like, the explanation I have for the market going up is that the market feared inflation, right? So if the market fears inflation, why would the market fear inflation? Because the employment change numbers showed up over 100% more than expected on Wednesday. Last payroll report for September showed 80 or 90% higher than expected. The fear is that inflation's going to spike. And what we saw for PCE data Thursday was that year over year core inflation did go higher than expected. And so if the world fears inflation, what makes the world more comforted regarding those inflation fears? Less payroll numbers do. Now, of course, you're going to have people with confirmation bias, especially with the election coming up, that are going to act like this is the end of the world scenario where 1 month's bad payroll report is going to somehow signal the end of the U.S. economy. But that's not true either. Like, again, the last payroll report showed 80 or 90% higher than expected. So what I see is just back and forth action here. But what this does mean is that it's pretty probable we're going to cut rates in a week. You know, in a little bit less than a week, in 6 days, it's almost certain that we're going to cut rates now. Now there was a chance that we weren't going to cut rates, but at this point, I think it's pretty certain that we're going to cut rates. I don't think we're going to pause right now, especially with this weak payroll report. You know, really interesting too. A lot of people are saying hurricanes, and I think that's possible. Where, you know, yeah, I think it's possible that the hurricane influenced this. You know, but yeah, definitely not strong payrolls. Yeah, there's a huge difference. So they expected 106. They showed 12. So they expected 106K. They ended up showing 12 instead, which is a huge difference, of course. Q is actually up, which is interesting. Very interesting. Very strange. The NASDAQ is up. Let's see what gold's doing. I'm sure gold's probably spiking on this report, no? What's gold doing, guys? Yeah, gold's spiking up. Not a shock for gold to spike up on this bad payroll report. But, man, interesting here. And again, if you want to day trade with me, this is my stats so far day trading. If you want to day trade, the futures market's probably where you want to do it. There's zero PDT rule in futures. You can day trade short, buy market, sell market. Patterns are very, very similar to blue chip stock patterns. If you day trade the NASDAQ or the S&P in futures, it's actually with the SPY and Q track, same patterns. No PDT rule, and Top Step is the most legit way to start it. They give you a demo. It has real-time data, and if you're going to pay for a demo with real-time data outside of Top Step, it's going to cost about the same. The base one's $50. Pretty similar. But on Top Step, if you pass their test with the demo, they fund you $50K for the base one with a 90% split. So it's 90% similar to funding yourself. The risk is $50. So limited risk, powerful split once you're funded, and it teaches you how to trade under pressure. It's like a beautiful middle ground of pressure, and there's no PDT rule. It's the single biggest edge in funding as well, because there's zero commissions. So I can day trade the E-mini, the S&P, the NASDAQ, $2.80 in fees per trade, zero commissions. So I can make $10, $15 trades and profit and still net profit. A powerful thing, the biggest edge. But they're an affiliate of mine. I'm biased because they pay me money. Confirm all of this stuff with them. I'm not an investment professional. I'm not liable if you lose. But the payroll numbers, super weak, super weak. If you want to check it out, link is in the description, or in the chat as well as the description. And yeah, market's testing highs of pre-market again after this report. So market's testing highs of pre-market. Look at that. We just broke highs of pre-market as well on the NASDAQ. The Q's pushing up. Gold's pushing up here as well. Interesting, for sure. Yeah, so again, I'm going to end this poll right now, guys, and I'm going to ask you, I just lost $14,000. Bro, you need to scale down your size, dude. Again, have you not been listening to anything we've been saying on stream, which is trade small? Don't gamble on freaking payroll numbers, bro. Try a funded account program before you freaking risk your own money. Most day traders lose. We're not investment professionals. Like, are you just not listening to the stream, bro? Scale down your size, dude. If you lost 14K on this report, no offense, but you're being dumb. You're gambling, dude. Settle down here, son. Oh, don't put him in timeout. I'd like to hear it, see if he says anything, but he's trying to blame it on us. That's crazy. Look, I'll unban him. I just want to see what he says. Yeah, look at this, guys. So market's ripping up over highs. Again, a 12,000 payroll report. 12K versus 113,000. Yeah, y'all be careful here. I'm not even trading this right now. I haven't traded at all since this report dropped. The problem is that gamblers justify gambling. I've said this before, but if you're a gambler in nature and you tell everybody, hey guys, you know, I'm risking 20K in the casino, people are going to look at you and be like, this dude's a freaking, you know, chronic gambler. He needs to settle down a little bit. But if you tell people, hey, I'm risking 20K in the stock market, some of them are going to look at you like you're a genius prodigy, you know, whiz kid, you know, Jimmy Neutron kind of person. And so gamblers kind of hide their gambling nature in stocks sometimes. And again, you want to just trade small. Most day traders lose, right? Doesn't matter what course you take, who you follow. That's why I talk about Top Step, because it's a lot cheaper to lose there than it is to fund your own account and lose that. Kind of a shocking amount here, though, chat. Man, what a big miss for payroll numbers. What I will say is that if you're gambling huge sums of money on this payroll report, you're gambling. Like, you need to settle down. Like, this is not what you do. It's not what you should be doing. It's not smart to do it. There's no edge to do it either. Nobody freaking knows what this is going to be, you know? Yeah. All right, guys. So we got this big old dip here, this big old pullback. Now we're pulling all the way back to the 200 EMA. We'll see if the first move, sometimes the first move can be absolutely the wrong move. And especially with this super weak payroll report, I think a downward move is a little bit too obvious as well for some people. And so we could get a big reversal here and continue to break down. I'm not saying we're going to, I'm saying we could. There's a difference between definitive and just looking at probabilities or possibilities. So again, be smart, guys. Trade safe. Who freaking knows what we're going to get here? Y'all just be careful, man. Again, I see a lot of gamblers out here. Yeah, just trade small. In fact, I wouldn't even try to day trade right now. I would just wait for this to settle down some. We've all learned our lesson the hard way, 100%, man. This is honestly a crazy amount lower. So, like, I'm going to put some of these payroll numbers up a little bit more. Unemployment at 4.1%. But look at this. Look at some of these payroll numbers that we're putting up in chat, guys. These are crazy amounts. I guess I'm biased to the downside now, but I have no freaking idea what we're going to get here. Look at this big bounce up. I'm going to short this now, but it's super risky, to be honest. And this is a challenge account, so this is not an actual account. This is me trying to get funded on this one, trying to get my profit on the day. Super risky though. But again, this is not me risking my own money. This is risking, you know, a souped up demo. Make sure it's not my actual funded account. Okay, good. I'm gonna take half of this off, and it looks like that was the smart move. Q's rip it up. And let me just get punished today. I'm gonna take another piece of this off. We're just gonna get out of this. So we ended up losing a few $100 there. Could have been worse though, honestly. I just don't want to get stuck in a high break here. I really just don't want to get stuck in a high break. And I think if playing with that, I could for sure. Yeah, we're still up 1,200 or so in this one. Do you think that they priced in the low report yesterday? I don't know. I don't think like people look at the market too. People look at the market much too. People look at the market too. Too binary in nature in terms of outcome, right? Like they look at the market and they think that just because like some of these numbers are good, we see it with earnings the most, where people we see it in earnings the most, where people end up seeing bad numbers or good numbers and they end up just attacking it. Like you see it with earnings where a company has good EPS, good revenue, good guidance, and then goes down, and people are so confused they don't understand why. But yeah, so we're gonna risk this account, I think. So this is a challenge account, so it's a $50 account. So we're gonna take that risk and see if we can get a breakdown here. And I'm okay with risking it. We'll have some fun with it. You know, I do see gold starting to fall a little bit. Let's see what Nvidia is doing here. There's Nvidia. Nvidia looks weak. What about Amazon? Yeah, it's 12, not 112. Yeah, it's not good. It's 12. 12 is very low, very low. Shouldn't you be buying? Interest rate bets are now higher. Well, I mean, it depends on how you look at it. I'm day trading, and so long-term outlook in terms of interest rates are insignificant to what I'm doing right now. I mean, it might go up still. I might be wildly wrong here. I don't freaking know. This is, like I said, this is a little $50 account, and so regardless of what happens, like we'll be okay. Like we're just, like I said, we're risking it. We'll try again if we need to, but. Yeah, 12K. The shocking thing here with this report is how inaccurate the analysts were in their predictions. So that's the shocking thing here. The analysts were just super, super wrong in their predictions. Like 106K. We only showed 12, right? That's a shocking difference. A shocking difference. Lock in some profit. Problem is Amazon's starting to bounce up. The thing about it though is like Amazon's getting really close to lifetime highs, right? I don't really want to get stuck in that. There we go. All right, we're locking it in. I'm gonna add some more to this now too. Back and forth. I'm just looking to see if we get a delayed downward response. The payroll number showed a weak economy, is what this showed. Like, that's what this showed. All right, I'm gonna go ahead and lock some of that in. There we go. There we go. I'm gonna add back here. Again, do not copy me. I'm not an investment professional. I have no freaking idea what I'm doing. Don't copy me. There we go. Nice. My thesis worked. And we're out. All right, so we got ourselves back to flat on the day. That's nice. So we're back to flat on the day. Yeah, the analyst. Well, it didn't drop the numbers by 90%. So we're looking at the expectational numbers. Technically, it dropped more than, or maybe you're right. Let me see. So let's see. Percentage-wise, last time they showed up at 250. Oh, last time they showed up at 223. I thought they showed up at like 260 something. So they came in. Yeah, I guess you're right. 95% worse than last time. No, it's 12K. It's not 120. It's 12. Non-farm payroll showed 12,000 versus 113, 106 expected, depending on which analyst you're looking at. So, yeah. Our downward thesis was absolutely correct, too. Look at that. Yeah. Our downward thesis is absolutely right, too. Look at that. We got the breakdown. Now, we're about to hit the 200 EMA. The ear's better. The ear's better. Y'all do me a favor, subscribe here, guys. Hit the notification bell. We're getting pretty close to 150,000 subscribers. Do it now. Try it one time. It might feel good. Subscribe, hit the notification bell, guys. We are going to trade live at the opening bell. Yeah, so 4.1%. Non-farm payrolls, 12K. Interesting numbers here. So again, manufacturing payrolls came in at minus 46,000. So manufacturing is what showed a lot of weakness here. Participation rate was about 62.6%. Government payroll showed up at 40K. 40K. Manufacturing minus 46,000. Average hourly earnings month over month ticked up 0.4%. U6 unemployment rate was 7.7%. Private payrolls came in at minus 28K. So private non-farm payrolls measures the change in the number of paid U.S. workers of any business, excluding general government employees, private household employees, employees of nonprofit, so forth and so on. So private non-farm came in at a negative at minus 28K. This is the futures market, Mikey. So in the futures market, you can day trade, short, buy market, sell market. Very similar to day trading stocks, but there's no PDT rule, and these funded account programs are kind of like souped up demo accounts where they give you a demo, test your skill. You got some pressure to succeed. You're risking something. The base one's only $49 a month, which is very similar to what it would cost if you paid for a demo account outright with real-time data like this is. But if you fail it, you're only out $49. It's a lot cheaper than funding your own account in day trading, where if you pass it, they give you a 50K funded account with a 90% split. And so if I get funded and I make 10K, I get to keep 9 of that, since 9,000, since they're funding me the money. They keep 10%. It's just a great way to learn how to day trade. Most day traders lose regardless of where they go, and it's a lot cheaper to lose here usually. Most day trades, like I lost thousands when I first got started, and so that's pretty similar to most day traders. Like most day traders lose their first couple accounts, and so this is just a really good way to get your first couple accounts out there. And if you lose, you're only out $50. It's not the end of the world. For $50 a month, you can always reset it and try again and all that stuff. But it's just a good way to learn how to day trade. If you want to check it out, here's the link. Great way to help support the channel. So NQZ24 is the NASDAQ 100 futures contract. So futures contracts expire quarterly. They're contracts, so they expire quarterly. Outside of them being called contracts and them expiring quarterly,
They behave very much like day trading stocks. Like I buy market, sell market. The big difference is sizing. So one contract at the NQ moves, I think it's $5 per tick up and down. So it's kind of like 500 shares almost, right? If I take two contracts, it moves $10 a tick up or down. If I have two contracts and it moves against me one tick, I lose $10, so forth and so on, right? But you day trade it like you day trade a stock almost. And again, if you want to check out Top Step, links in the description, or you know, we put it in chat as well. Yeah, I think you get to keep your first like 10K or 20K. John, is there a recession coming? I don't know. Let's ask the poll. Let's do it. Like, this is probably a pretty good poll question. All right, so I asked people, are you bullish or bearish? We got thousands of votes. You can kind of see the results of those votes now. 64% of them were bullish, 35% are bearish out of 2.1 thousand votes. Now, do you think we hit a recession in 2025? Yes or no? I don't know. See results. Do you think we hit a recession in 2025? That's a good poll. Let me know how you feel. Vote on that poll right now. We're very choppy from this report. Yeah, J-Powell's probably going to cut rates next Thursday. He kind of has to now on these payroll reports, I would assume. No? Okay, so yeah, look at the odds change here, chat. Wow, so look at how much these odds have changed since this payroll report. This payroll report wildly changed it. Wildly changed it. So now, guys, so now it is 98.8%. Look at the pivot. We've gotten the probabilities of rates. So again, now it is 98.8% likely that we're going to cut rates 25 basis points. Okay, this is 50 basis point cut. Okay, so again, 25 basis point, we're 99% here. 1.2% chance of a 50 basis point cut. And this is what I was trying to tell somebody earlier. It's like somebody was like talking to me. They weren't arguing. They were pretty respectful. But they were saying how they didn't think we'd cut rates again this year. And my response to them was, while there's a chance, it's pretty low probability. Like it's pretty certain we're going to cut rates in a week from now, which is on Thursday, and 6 days from now. It's pretty probable. Why? Because payroll numbers just came in super weak now, right? So payroll numbers came in at 12K, very weak sign. The weaker the economy is, the more likely the Federal Reserve is to cut interest rates to stimulate the economy, bring interest rates down, contribute to more spending. When everybody has cheaper access to money and loans and all that stuff, they tend to spend more, right? And so it stimulates the economy in that regard. That's what the Fed does. So the Fed can influence rates in a number of different ways. If it's a really desperate thing, what the Fed will do outside of just base rate cuts is they'll do something called quantitative easing, which means that they create bank reserves online and they use those bank reserves to buy up financial assets like bonds, injecting liquidity into those markets, and ultimately allowing interest rates to go down some more. But there's a cost to this, which is generally inflation. Like when you print that much money, inflation tends to happen because people have more money to spend. And so, you know, you see that happen in the most desperate moments in the economies throughout history, where we did it in 2020 after the pandemic. We did it in 2008. And so, yeah, that's what happens, right? And so, again, the question is, if the Federal Reserve thinks the economy is weak, they lower interest rates. You know, so now that's why this rate changes drastically from a 25 basis point. There were two likelihoods 20 minutes ago. There were two likelihoods. One of them was a pause. On this side was a pause, which is 0 basis point cut, keeping it the same, basically pausing rates where they are. The other one was a 25 basis point cut, right? Now we have a 25 basis point cut on the right, and we have a 50 basis point cut on the left now. So now it's even more probable that we're going to cut rates. And it makes sense why, because lower payroll numbers signals what? It signals a weaker economy. And vice versa, if the economy was super strong and inflation was like spiking up, say CPI and PCE inflation was ripping up, like we did quantitative easing in 2020. We printed money, we sent out stimulus checks, we cut rates down to almost 0, and the consequence was inflation spikes. If you look at CPI inflation, and you look at like the CPI inflation graph over time, what happened whenever we did all that stimulus is inflation spiked up to almost 10%. And so when this happens, the Fed takes the other end of it. It's what's called a hawkish Fed, a restrictive Fed, a Fed that wants to restrict the economy to push down inflation. And so they'll do things called quantitative tightening, which is the opposite of QE in a way. QT is generally passive QT, which means they don't directly sell bonds like QE is buying up bonds through money printing. QT is reducing the Fed's balance sheet, taking liquidity out of those markets, keeping interest rates high. And the Fed wants to keep interest rates high to discourage spending. When interest rates are worse, people have less access to cheaper money and they spend less generally, right? And so it pushes the economy and inflation down in that regard. And so that's what happened. The Federal Reserve started raising rates. They did a bunch of rate hikes trying to hurt this inflation, and that's what we got. We got inflation to drop. Now, inflation doesn't ever really go down except for small moments like here it went down, but that's like the only moment in the last 25 years that it's literally gone down. What we want to do with inflation is slow it down. So instead of going up at 10% in prices per year, it's only going up 2.5% or 3%. Now, one of the overarching points I want to make about all of this that I regularly make here on this channel is that if you're not investing to hedge against that inflation, you are losing money. You know, with that said, inflation, a reasonable inflation rate is 2.5% if things are all sunshine and rainbows. And so even if we're at a reasonable inflation rate and you have 100K and you got it sitting there over a 20 or 30 year period, you're going to lose over half of your money over 30 years if you don't invest in it, right? If you don't hedge against that inflation through something, you're going to lose your money over time, right? It's one of the reasons you should never just sit on cash for long periods of time, in my opinion, because if you do, you're just burning it basically. Like it's a waste of money. Now you could buy government bonds. Treasury bonds is what they're called, where you loan the U.S. government money and they pay you a specific interest rate. If it's a 10-year bond, they might pay you like 4% right now. And so, you know, so you're going to make, if it's a 10-year treasury bond, you're going to make, whoa, my math is off. If it's a 10-year treasury bond and you got 100K, you're going to make about $4,000 a year in interest payments. And then at the end of that 10 years, you're going to get your 100K back. So you'll make at least 40K in treasury bonds if you continue to buy them and they pay out an average of 4% or whatever it is. So there's a lot of ways you could do it with real estate. You could use it with a mortgage as well. You could hedge against all this stuff with a mortgage also. Say your mortgage is $1,500 a month, right? Then we use that same inflation calculator where $1,500 a month, but over time it's going to be less significant. By the end of that mortgage, it's only going to be like $700 in buying power versus $1,500. And so there's a lot of ways you can hedge against inflation. And that's one of the reasons this last formula is what most real estate investors use to get rich over time, to gain wealth, right? There's a real estate strategy, and I'm definitely not recommending that you do it, but it's called BRRRR, right? Buy, renovate, rent, refinance, repeat is what it stands for. And you might look at that like, oh, it's sketchy, and it is sketchy. But the way they make their money is because over time, those houses are going to appreciate and you're going to be able to ask more and more and more for rent over time. And so your mortgage is going to, on each of those properties, is going to get paid off over time through the tenants that you stick in there. And the mortgage is going to be less significant over time. So you're going to be able to raise the rent on those tenants while your mortgage is going to lose power to inflation. And so that's how a lot of people in real estate get rich. If all of that, if you're able to follow everything I just said, there's a lot of ways you can maneuver yourself to make money over time. But the point is, if you're not sitting on some type of investments, you're losing money to inflation. Yeah, no, well, I was just using that as an example. You could buy T-bill, Jonathan, talking about getting paid twice a year. You could buy like T-bill ETF and get paid monthly from it. You know, there's a lot of ways you can make 3, 4, 5% in markets right now. Treasury bonds are guaranteed, but there's a lot of other ways that are virtually guaranteed. CDs. Yeah, so inflation isn't about 8% a year, D. inflation is nowhere close to 8% a year. 8% is like the worst it could ever, like it ever is. You know, at the peak time of inflation, you know, at like the worst moment of inflation in the last 20 years, it was right around 8%. So inflation, you know, it's about 2.5% is really what we're looking at, you know. But the whole point of these investments is to hedge against inflation to begin with. All right, so we're starting to break down a little bit. We had bad payroll numbers. It's more likely that the Federal Reserve is going to cut rates now. It's still pretty probable at 25 basis point cut, but again, we'll see. Yeah, top 3 worst trader ever. Top 3 greatest economists ever in the world. Well, it depends on what kind of bonds you're getting, JG. There's a lot of different ways you can do it, bro. Like different bonds, short-term, long-term. In theory, long-term bonds should pay more, and short-term bonds should pay less, because with long-term bonds, you're locking your money up for longer, and so there's inherently more risk, and you should get paid more for more risk. But sometimes that yield curve inverts, where short-term bonds pay more than long-term bonds. And when you hear this yield curve inversion, you know, some people use it as like a recession indicator. That's the yield curve they're talking about. They're talking about short-term bonds paying more than long-term bonds, which is backwards to how it's conventionally supposed to be. Anyways, market's starting to go down. NASDAQ dropping a little bit. QQQ dropping. Amazon falling. Amazon's still around lifetime highs, though. So it's possible Amazon makes another break for it at the opening bell in 30 minutes. We'll see. 2 strong hurricanes. Yeah, but I don't know. These numbers were really, really low. Deflation is now impossible. Sure, it's not impossible. It's just incredibly rare, and it always has been. You know how, like, think about it like this. If I bought a house in 1990, I probably got a pretty nice house for like 70K, 80K. $70,000 house in 1990 is probably living the good life, you know. You buy a $70,000 house right now, you know, you better put some bars on those windows, because, you know, it's not living the good life right now. So inflation happens over time. You know, it's inevitable. Prices are going to go up, and you can use that, and it can be a good thing. You can use that to make money over time. You know, again, the easiest way to put it is you could buy things that typically go up in value, like real estate, gold, S&P 500, the NASDAQ, the Dow, a lot of different things, silver, you know. Let me look at a polling number. So we asked people, and we're almost 50-50 split here. So 49% say yes, which is kind of a shocking thing. 37% say no. 13% say I don't know. See results. I'm going to assume this is political bias, though. It's an election year, and so, again, during election years, one side's going to be like, one side wants to make you think it's, oh, sorry, I bought my mic. One side's going to make you think it's the worst it's ever been. The other side is going to make you think it's the greatest it's ever been. Both of those things are not true right now. I'm here to tell you, objectively looking at it, both of those things are not true. GDP's at 2.8%. Is that the worst GDP's ever been? Of course not. Is it the best it's ever been? Of course not. You know, unemployment's at 4.1%. Is that the worst it's ever been? Of course not. Is that the best it's ever been? Of course not. You know, and so people got to stop being so politically biased. People have to be resilient is what you got to be. You got to understand where people are trying to manipulate you, where people are kind of pandering to your emotions on both sides, and just be resilient towards that sometimes. You know, recognize when somebody's trying to manipulate you on both sides, and you know, protect yourself from that sometimes, I think. The employment report was good. Well, good is subjective. It definitely was very, very, very low relative to the expectations, Mikey. All right, so here's the breakdown. My short thesis worked. I should have held it, but that's all right. Yeah, I can respect somebody so much more if they say, hey, I don't know. Hey, it's nuanced. Like, there's a lot of good and bad things about either side. You know, if somebody claims to, like, agree 100% with one side, they're either desperate to fit in or they're just not the smartest people. there's so much variance that have in terms of policies with each, not just side, but politician in general. You know, so I just avoid the whole realm. It's just too much. Same thing with stocks. You know, like you get people. Typically, the way I identify rookie traders is if they think any one direction or possibility 100% has to happen, short term especially. Like if I hear somebody say, yeah, bro, we're gonna go green at the opening bell, watch, right? And they're definitive 100% gonna happen, I immediately recognize them as a rookie trader. You know, now if somebody's like, hey, I don't know what's gonna happen, maybe this level holds, maybe this level doesn't, you know, they might have more experience. But you just have to, you gotta understand the degree of variance in markets. Yeah, and so Bao says if you live in Cali, try 1.5 million for a house. 100%, man. And again, you could see that as a good or bad thing. I know me saying this is going to have some people say, "Oh, how is that ever a good thing?" It's good in that you can invest and make so much more scale versus what you would get investing in a house in Texas. You know, as an example, I live in Texas, right? So the scale at which you can make money is faster. Because let's say in real estate you earn 8% a year. You got a $1.5 million house at 8%. In 10 years, you're going to earn over $1.5 million from that investment. You know, it's a powerful investment. And so, you know, I'm not saying it's good. It's certainly overpriced. Silicon Valley and the surrounding areas are all pretty overpriced because of the tech hub that it is, right? But you know, there's ways you can benefit from it, I guess is the point. Not saying it's good, it's just silver lining, I guess. Which way do you guys think the market's going at the open? Do you think it's going to go up or down? Right now, we're kind of flat here, which is interesting. I don't know if everybody's waiting for next week or what, but yeah, I'm looking at Apple. Apple at 222s. I'm just glad we got some type of economic reports. All real estate is over-financialed and overpriced. Well, prices for real estate go up over time. You know, the problem that happens is that, you know, it kind of happens with the stock market, where when the market goes up, people say it's too expensive to buy it. And when it goes down, they say it's too weak to buy it, right? And so what happens is that long-term, the trend looks like this. Right? But people thought it was too extended to buy it right here. And so they missed out on all of this, right? And so you have to understand real estate's very similar to the S&P and the NASDAQ, which is going to go up over time, right? Real estate prices are going to increase over time. Now, you might have small bubbles of 3-4 year periods where they go down for sure, right? Like they're not going to go straight up, but if you hold it long enough, generally most real estate's going to go up over time. There's a little bit more variance with it, so you do have to be more calculated in terms of where you buy the house. Like I live in Houston. There's a lot of places in Houston where I just straight up will not touch a rental property because of the likelihood that, you know, it depreciates. But if you're smart and calculated with where you buy it, it's generally going to go up over time. You know, the easiest way to hedge against that stuff, at least in markets, is DCAing. You dollar cost averaging. DCAing is where you make calculated specific buys, averaging into different positions over specific time intervals. Like an example of this would be saying, hey, I'm going to buy the S&P I'm going to buy 10 shares of the S&P every month, right? I'm going to buy 10 shares of the S&P every month for the next 5 years. Yeah, that's going to curb a lot of the volatility or the weakness or strength that we get. Even if the market crashes over a long run, I'm still probably going to be green in that portfolio because of the dollar cost averaging over time. You know, the easiest formula I want people to learn is just compounding formula, which I think a lot of people surprisingly don't know and understand. You know, so like this compounding formula is powerful. You know, Warren Buffett describes compound interest as what, the 8th wonder of the world or something like that, and it really is too. Like you can benefit from compounding in stocks. You know, I don't know about crypto. Crypto is a little bit. I like crypto and I buy crypto, but it's different. It's less time studied. You know, there's less historicals on Bitcoin. It's one of the single best performing assets ever, but it has less history to study. Yeah, regardless of price, Justin. Sure. So DCAing is regardless of price. Like, hey, I'm gonna buy the SPY I'm gonna buy the S&P. I'm gonna buy $10 shares of the S&P regardless of price every 3 months, you know, or something like, right? Like that's a DCA plan a lot of people follow. All right, chat. We got 15 minutes until the market opens. 15 minutes. Let's see this. Let's do this. I'm going to short this now, although I think it could also go choppy. I'm just going to take one contract, and if it goes in my favor, great. If not, it's all good. There we go. So far, so good in my favor. All right, so we added a little bit prematurely here, I think, but that's okay. Three contracts, though. There we go. Took half off there, locked it in. Took more off. Probably add some more to it if it falls. Going against me a little bit now. I took half of it off, just locked it in. We're only down a small amount. Kind of flat leading into the opening bell. Hopefully we get some better price action. We do have ISM manufacturing PMI, I forgot. So we have ISM manufacturing PMI data at 10 o'clock today in about 45 minutes. So just be ready for that as well, chat. Somehow we ended up making money here. Alright, we got out. Ended up making a little bit from this trade. The direction was correct again. Just got a little bit of fake outs beforehand, but it's alright. Flat day of relief. Any divvy stocks you recommend? I don't recommend anything because I have no freaking idea what anything's gonna do. What I will say though is that if you're gonna buy stocks that pay dividends, just make sure they're good stocks. Like the theory of the concept of buying divvies is easy, which is that like you buy healthy companies that are going to go up that also pay dividends, right? When you start to get into the riskiness of like high paying dividend symbols, I would just be very careful because there's a lot of scammy, like crazy, like basically they'll pay you 50% a month, but that thing's dropping at 75% a month, you know. And so there's just a lot of risks there. You know, the easiest way to, what I would do is just buy blue chip stocks long term, and then let those blue chip stocks also pay me dividends, even if they're small, right? Like, I think if you try to live purely off of dividends, especially the smaller the account is, the harder that is to do. The better way is just to buy up blue chips and let the dividends pay you over time, even if they're less. Personally, that's what I would personally do, but not an investment professional, not liable if you lose. Always make your own assessment, trade smart, you know. Like, what rental purposes? Yeah, I don't know. What people always scream recession just because, again, Kyle, you got to understand. And again, I hope, like, I feel like me saying this is going to ruffle so many feathers because people are just so, we're a couple days before the election. We got 4 days. So people are just so emotional right now about everything, right? They're getting pulled in all these different ways, and they're at their peak toxicity for politics. But recessions are rare. Crashes are rare. Right? But for whatever reason, everybody and their grandmother predicts 5 crashes a year, 5 recessions a year. And then when we don't, like, I'll put it this way. There's a lot of big time YouTube channels, big time YouTubers, big time channels that essentially told you guys that we would crash multiple times by now, and that we would have already entered into multiple deep recessions, like into like really bad market scenarios. Right? And throughout this whole time, they've been predicting this, and some of them have even made fun of me, which is crazier, right? Because I told you guys years ago we didn't have to crash, that I didn't think we would hit a recession, and that I thought the market was probably going to go up, and that was the biggest edge the market gives you is on the bull side, and I was absolutely right about it. But throughout this period of time where everybody's screaming crash, correction, and recession, the market has done this. You know, market's gone straight up. And again, same people saying it, they either double down on it like, oh, you know, or they cry manipulation. Either way, recessions are rare, crashes are rare, and they're incredibly difficult to predict. And one of the ways people get views and interest is by screaming crash or recession, right? You get more clicks, you get more views. If you tell people this is about to happen, a crash is going to happen. I know some people on their YouTube channels, every other week, they're posting a crash video. Like, the market's going to crash, and they've been doing this for like 4 years straight now. And then they tell people the market's going to crash. Every major economic report, every major FOMC decision, it's the end of the world crash scenario. And then it doesn't happen. And then they just kind of wait, and then they do it again, and they do it again. And some people keep on clicking and keep on believing it. The reality of it is, again, one side right now, it's an election year. They want to make you think it's the worst it could ever be. The other side wants to make you think it's the greatest it's ever been. Both are wrong. Truth is somewhere in the middle, like most times in life. Yeah, there's what I don't like about those places, Justin, is the landlord, the landlord laws there, like the squatting laws. Like, I will not touch a house over there, just because, like, in some places in New York, if you leave for over 30 days, somebody can literally just take your place and never leave, you know? That's a scary thing, bro. I ain't buying a house up there. Yeah, I'm not talking about anybody specifically really here. I'm going to delete some of these comments claiming it's one person. No offense to you guys. I don't know. Yeah, I mean, I'm not one of those people that screams scammer just because somebody makes money. Like, I do this to make money. You better believe I do this to make money, you know? Everybody does. Nobody, it's not a reasonable expectation for me to not do this to make money. What I'm trying to tell people is this. Like, I think a couple things that have happened, and I say this like a broken record every day. The movie The Big Short happened. And the movie Big Short happened. Everybody that's into finance has seen it. And you know, it really like romanticized this concept of predicting recessions and market crashes. And seeing something that nobody else saw and making these big predictions and all this crazy stuff, right? And I think that has influenced a lot of people to chase that, right? They chase it. And so in turn, they overpredict crashes. They overpredict recessions. You know, you got to look at the data. You know, you hear people say, oh, the data's wrong. Nobody cries manipulation more than somebody that's wrong about a prediction. And sometimes maybe the data is wrong. We've seen that too. But you have to look at the data, right? And GDP data, almost 3%. Unemployment, under 4.5%. Payroll numbers, super weak this time. But, you know, in the end, we're just not at a recession yet. And it doesn't mean we're not going to hit one. It doesn't. Eventually we will. But, you know, just like eventually we're going to crash. But if we crash today, the people that claimed we would crash 4 years ago were still wrong. You know, if we hit a recession in 2 years, the people who said we'd hit a recession 3 years ago were still wrong. And so, like, I don't hold my breath for it, because running a YouTube channel like this, the most over-predicted things are crashes and recessions, right? Everybody and their grandmother wants to be the guy who called the next big crash, and I'm here to tell you, you're not going to be, because most of the time when we do crash, nobody thinks we're about to. So... Oh, I do it for free. Does it cost anything, Trade Live? I don't sell a course. I don't sell a service. I don't claim to be even a good trader. I give everything away for free. I don't charge for any of my content. Like, I got sponsors, but I mean, you know, it's not like y'all are forced to buy anything. And again, if I were you guys, I would trust the people who are claiming to do it. You know, I just like teaching, guys. You know, really, I made most of my money 20 years ago, and the strategies that I use don't even work anymore. And I don't even trade anymore. I just like teaching, guys. Now, buy my trading course for $5K a month in my mentorship program. What it really is like, it's building up more gurus, right? So, like, it's hard to explain. And I'm not going to mention anything specific, but millionaire students, usually they grow a following, and then the next millionaire student, he grows a following, and then so forth and so on, and they're out here just selling you courses. I just, you know, everything I do is free. I don't charge for anything. I backed myself into a corner. I could probably make millions selling courses. I genuinely could. I got a nice house. I got some nice cars. If I wanted to use those as credibility builders and sell you guys some sleazy day trading course on publicly available content, based off of the following I have, I probably could. But I told you guys I wouldn't, and I'd rather just be real about it and tell you guys I make money and tell you guys, you know, this is a business, which it is, and, you know, I'm not doing this out of the kindness of my heart. I didn't get a mortgage for it, Justin. All right, look at Amazon. Amazon tested lows here. The market's been trending down. Yeah, most of the stuff in those courses are publicly available for free. And the problem is, like, the people who end up buying the courses, sometimes they're just older. And they like, you got some people that it's confirmation bias. And I say this every day, but this is what it is. It's confirmation bias. Like, if I spend $5,000 on a mentorship program, I want to believe it was valuable. Like, I want to believe it's worth it. And so if I spend that much money, I'm going to ignore all the flaws that I see in whatever I bought, right? It's kind of like if I spent $10K on a piece of crap car, I might think it's the greatest car ever because I just spent too much money on it, you know? 10K might be a fair thing for a piece of crap car nowadays, but the point remains, right? So a lot of people that buy these courses, they know that they could find the same exact thing in these courses for free, just from like pure capitalism perspective, right? Like people take the courses, learn the information, say, hey, I could grow a following teaching people this stuff. They give it away for free, right? It's also the internet, and you can find most of the stuff in these courses. You probably find the actual courses floating around somewhere. But yeah. Yeah, it was only 12,000 payroll numbers. 3 minutes chat until the market opens. Nachos, organic nachos. Yeah. All right, guys, we got 2 minutes. All right, guys, less than 2 minutes. Who you guys got versus Tyson and Jake? Where is Super Micro at today? We got a minute and a half left, chat. A minute and a half left. Super Micro cracking lows again. Super weak, man. Yeah. I mean, do y'all really think Tyson is going to win, though? No, so it's in 2 weeks from now. It's a little bit less. It's in a week and... It's a week and a half, 2 weeks. All right, here's the... We just broke lows a couple minutes, or a couple seconds before the opening bell, chat. Yeah, Tyson's going to get beat up, unfortunately, if he goes through with it. He's fighting a 20-something-year-old juiced out Paul brother who actually knows how to box. I hope I'm wrong, and I hope Tyson beats him, but I seriously doubt it. Again, I've been arguing about this for 3 months now with people. I get it. Every older person wants to believe that a 60-year-old still got it. The problem is he's going to gas so quickly. Right? He's going to gas so fast. There's just no chance that Jake's got a better chin. And he's younger, and he's probably on juice. So, all right, guys, here's 10 seconds. All right, there's the opening bell, guys. So we got the opening bell happened. Breakdown so far. All right, so we got some consolidation happening. Amazon getting very close to all-time highs. We do have ISM manufacturing PMI data. Yeah, so we do have ISM. Look at this bounce, though. We did get a somewhat of a bounce here. All right, chat. So we're still sitting tight, waiting. Look at this big old rebound at the open. You know, I'm wondering if this is gonna mean. All right, guys, almost here. Nice. So we got this pop up. I'm waiting for at least a couple minutes to play out again first. Again, we got ISM manufacturing PMI in about 25 minutes. I'll put the timer up. Usually I would short this, but who freaking knows what's going to happen. Alright, so here's the timer up. We'll leave that right there. That's good. Yeah, if you think Tyson's really going to make 3 rounds, he's of course not. He just doesn't have that much energy. He doesn't have that much cardio. He's 60 years old, guys. I like, listen, I train jiu-jitsu regularly, right? The amount of cardio it takes to go round for round with somebody, after 3 rounds, after 1 round, Tyson's going to be done. He's not going to be able to do it. I hope I'm wrong. Super Micro is bouncing back. It's at 2860s. But, like, the amount of cardio that it's going to take, it's just his power. Like, as you get older, a couple things happen. Your speed goes. Your cardio goes. Your reaction timing goes. That's the biggest thing. Your reaction timing. That fast twitch leaves as you get older, right? Your power goes eventually too. And Tyson's almost 60, guys. It's just super unlikely. Super unlikely. There's a reason you don't see a lot of fighters like that still fighting, unfortunately. And I get it. A lot of people are Tyson fans. I want Tyson to win. I hope I'm wrong. I will celebrate for a long time. I will scream and yell excited if Tyson wins. He's just not going to. Not if they're really fighting. I'm not sure if they're doing it as an exhibition, and if they do, it's just going to be a draw, and they're not really. It's going to be like Roy Jones and Tyson. But if you saw Roy Jones fight Tyson not that long ago, both of them looked very weak. So, all right, guys, we're still pumping up a little bit. We're about 5 minutes into the open. We're buying this dip. We're at the opening bell. All right, we just made about 80 bucks. We'll take it. We're going to try to scalp. We're up over 100 today in this one. I'm going to short down here. Kind of a risky thing. There we go. There we go. Bad fill in the rest. All right, so we're bouncing up a little bit. I like shorting this move, to be honest. Here we go. All right, we're out. What a big drop. Look at Amazon. Look at the Q fall. Yeah, I mean, Falco, listen, I hope you're right, bro. Listen, y'all act like I'm rooting against them. I'm really not. I'm trying to be logical here. And I think a lot of people are getting their emotions in play. Like, people are so desperate. They hate Jake Paul so much, which means that Jake's been smart with marketing. It's the Conor McGregor effect. People just want to see him get KO'd, so they'll tune in no matter what, right? And so they desperately do not want Jake Paul to win, which means that they're doing their marketing job with this fight. Again, the problem though is that Jake Paul's in his under 30, Tyson is over 50. All right, so we're up $500, almost $600 so far, because Top Step X has 0 commissions and tiny amount of fees. K. Yeah, if it's an exhibition, it doesn't matter anyway. They're just going to be pit-patting around. Alright, I'm going to take my one more risk with the profit I've made today. There we go. All right, guys, so we are doing pretty good. We're up about 830s right now, 830s. How dropping rates will help me, I don't see that. Dropping rates will unlock cheaper access to money. Short. I'm gonna keep it one contract. We're gonna try to get green into some stuff first. All right, there we go. Just made some more. Up about 9 on the day. There we go. All right, we got $400 left on this one. Left. Oof. Now it looks like about 800. Yeah, we got to cut that. It's a big swing. It's all right. We've made a lot leading up to today. We're already up 600 on the day still. We're going to put our actual challenge account up here. Or our actual funded account up now. We'll knock the rest out later. Big strength though, man, honestly, on these payroll numbers. Big pop up. Alright, so we're gonna start to short micro contracts right now. I'm gonna short a little bit. See if we get a breakdown here. What a green move here for markets though, guys. Wow. What a powerful rip up. We're down 15 bucks. It is Friday though, guys. We ain't got no job and we ain't got ish to do, but not lose money today, so. What a green surge, man. Honestly, with these payroll numbers, it's kind of shocking, too, how much the market just flew. Now, the question is, when does it settle down? We are hitting these levels here, but who knows when this thing starts to settle. Hopefully it settles sometime soon. Just a powerful swing up. See if we start to reverse. Look at that big pop up. I might, let's see. Just breaking highs again here, chat. Wow. We just tapped over highs. Highs again here, man. Wow. What a squeeze. Look at this squeeze, chat. Sheesh, dude. What a monstrous move here, man. What a Friday. What momentum. Let's see if it keeps going here. Part of me wants to short this, but man, it's a risky short. I'm going to take one contract here in micros. What a move. I'll add a little bit more to this here. I think we pushed up too much short term. We're going to start to turn eventually. But, man, if I'm wrong, it's not the end of the world. But, what a freaking move here, man. There we go. All right, we're going to take half of that off, lock some profit in on this thing. There we go. There we go. All right, so we just made a little bit of money there, scalping it on our actual funded account. It is Friday though, chat, so remember. Now we're shorting again. We've got a little cushion on the day, but we're not going to play too much of this. Flat. Just keeps on tapping away, but then there we go. There we go. All right. Not too bad. So we're catching some of these movements here. Yeah, so we had regular manufacturing PMI data come in slightly higher at 48.5. It wasn't like a massive beat though. The ISM data shows up at 10 and 15 minutes. So sorry, I forgot to put this one up. This one's not a big one though. The ISM data is always bigger for manufacturing PMI. So this one showed up slightly higher at 48.5 versus 47.8 expected. I think you are all wrong and we crash hard. Well, you're not the only one. There's a lot of people that predict crashes like this. You know how many people I've had come to my stream and say that we're going to crash over the last 3 years? You know how many of them are still around? Zero. Zero of them. I'm not saying you're wrong. You might be right. I don't freaking know. But crashes are wildly overpredicted. Like, people do it, I think, because they want to be contrarian, especially during election years. But usually what happens is that sometimes they're even like disrespectful. They're like, you don't even know, bro. You're sticking your head in the sand. The market's gonna crash, bro. You know? Because I know stuff. People don't, right? And then over the last few years, when the market goes up 25% last year, this year it's up 20%. How many of those guys are still around? Zero of them. Interesting how it works. The anonymity of YouTube just makes them create another account and then secretly hate me because they know I was right. I'm still here, bro. I've never seen you before. No, I'm just mad. I really haven't seen you before, but maybe you are one of them. I don't know. Yeah, the fun, like, and that's what I'm trying to tell people. The funny thing is nobody freaking knows, but everybody wants to be like Mr. Miyagi, like, a crash is gonna happen, guys. You know, I just know. You know, nobody else knows, even though everybody else and their grandmother are over predicting crashes. All right. Super Micro Semiconductor still testing lows. Oh, I remember you, Cat's Groceries. Yeah, you were predicting crashes. Market, since you predicted that's up 40-something%. You know? I appreciate you for being honest about it. It's all good. It's all love here. Like I said, I'm wrong about everything, so what do I know? Super Micro testing lows of the day. All right, we're waiting on ISM data. Do you think 2025 would be a bad year for stocks? To be honest, kind of. I genuinely do. I think markets might go down next year. Just in terms of balance. Balance can explain a lot of things in markets. CPI, all that stuff. Balance is a pretty common theme of markets. And the market's gone up a lot in the last 2 years straight. Like a lot. And so I think we could have a red year next year, to believe it or not. But as what most people who make these things should say, I have no freaking idea whether that's accurate. That's just a straight up guess based off of balance. And I might be wildly wrong. You know, I don't mind anybody telling me, hey, I think this is going to happen, but who knows? That's understandable. Telling somebody that this is going to happen, and if you don't believe me, you're dumb, is the opposite of what people should be saying, you know? You just got to be reasonable about it. Like most people, if you can admit you don't know, I can respect you 100 times more than if you get mad at me because you, like, an example of this is that somebody earlier was getting mad at me. Ty was getting mad at me earlier because I theorized that if ish ever hits the fan, a shiny rock in gold is not going to be as valuable as people make it out to be today. Most of the time, people that are selling you the gold and subscription boxes saying if the world ends, you'll have gold. Gold's just a shiny rock, okay? If the world ends, we're going to have a lot bigger problems than needing shiny rocks. We're going to need food, medicine, like all kind of stuff, shelter, tools. All of those things are going to be more valuable than a shiny rock in gold. Yet, for whatever reason, people argue with me like they somehow know, right? Like in the end, I have no freaking idea. Maybe I'm wrong. Let me know what you guys think in chat, right? But acting like you know for sure what's going to happen if that ends. Most of the time, these are people that are just getting sold on investment, precious metal boxes. Like, hey, buy my monthly subscription gold box in case in case stuff ever hits the fan, you'll now have a bunch of shiny rocks in your basement, you know, to protect yourself. You know what I mean? And so in the end, I can respect somebody that says, hey, I don't freaking know, and then doesn't get upset if I theorize something different. You know, I think that's how you got to be. Anyways, we got 9 minutes left. 9 minutes. Yeah, cigarettes are definitely going to be valuable for sure. Oh, booze is definitely going to be valuable. But it's probably going to be pretty easy to make, too. You know, leave a bunch of peaches out for a few days. You know, boom. There you go. All right, guys. 9 minutes. 9 minutes. We'll see what ISM PMI does. The market's probably going to be flat today, even though the payroll number did show a shocking amount lower than expected. All right, Supermicro just cracked lows again. I'm actually surprised it's not influencing tech more. Supermicro just broke down to 27s. NASDAQ, a couple other things starting to push up. Ren says, I haven't seen a decent... I mean, that you could either be talking about literal peaches or something else with that emoji, Ren. But, hello? Hi. All right, guys, so we're here. We got ISM manufacturing PMI data coming out pretty soon. Payroll data's out. NASDAQ's breaking highs. Oh, yeah. Where's MicroStrategy at? Again, Supermicro dumping down, but Amazon's actually approaching lifetime highs as well. All right, Supermicro breaking down again. We got 6 minutes. 6 minutes, chat. Testing low. We're getting ready, chat. We're getting ready. Again, manufacturing PMI for today is expected at 47.6. 47.6. All right, chat, we're waiting. Look at the NASDAQ test highs again. We got 4.5 minutes left. What are you guys doing this weekend? Internet friends. All right, chat. I'm just hanging out. We're waiting. Market just broke highs again. Amazon's still sitting close. All right, we're breaking highs again. We're up to 172 on the NASDAQ, 172. Bitcoin shooting up today at 71,500. That's the Purchasing Managers Index, Daniel. All right, we'll have fun, Philo. Sleeping? Yeah, I'm going to try to sleep. I mean, I think if you, yeah, you can day trade, or everybody's different, brother, in terms of what kind of risk you should take. I usually take the approach if I take a lot of risk and just reset it if I need to. But the money's less important to me than for some people, so like, you know. So PMI is expected again at 47.6. It drops in 2 minutes exactly. All right, guys, here we go. Breaking highs again. Here's the report, guys. Coming pretty soon here. Pretty soon. 2 minutes. All right, here we go. Less than a minute, chat. Less than a minute. All right, we're at 20,170. We got 30 seconds left, chat. 30 seconds left. Again, we are day trading on Top Step funded account program and futures. We're up a little bit today. If you want to day trade with me in futures, no PDT rule. Very similar to day trading stocks. I'll put the link up right there. No PDT rule. Great way to learn how to day trade. They're an affiliate of mine. I'm biased. They pay me money. All right, and here's the report right here. So ISM PMI came in lower than expected at 46.5. 46.5. Construction spending came in higher than expected. Manufacturing prices came in higher than expected. PMI came in lower than expected. Higher prices, lower manufacturing strength. ISM manufacturing employment for October came in lower than expected as well here. But again, here, I'll put these numbers up on screen. 44.4 for manufacturing employment. PMI data showed 46.5 though versus 47.6. A little bit lower than expected manufacturing numbers. And again, if you want to day trade with me, we're up small on the day. In the futures market, you day trade the S&P, the NASDAQ, the Dow, the Russell. Gold patterns are super similar to blue chip stock patterns if you day trade index funds like the S&P and the NASDAQ. Basically, the SPY and Q price action. It's the best of both worlds, limited risk. They give you a demo, test your skill with a demo first. If you pass the test, they fund you. If you fail, you only lose what you pay for it. In this case, the base one's $49, but there's larger packages as well. It's just a great way to test your skill. It's kind of like a souped up demo account. And if you were going to pay for it outside of this, it'd probably cost the same. Check it out. I'm going to get out of here. I love you all. Y'all have a great day. Have a great weekend. Y'all be safe. I appreciate all the love. We'll be back next week. Next week is the rate decision week, which is one of the most important ones. We have the election next week, of course, the rate decisions next week. We got a couple other things going down next week. Yeah. We got the FOMC decision, consumer sentiment data on Friday, services PMI on Wednesday. Tuesday, we have ISM services data. Do we have any earnings next week? Let me take a look at this. I know we have like AMC earnings, and we're going to stream it like we always do. Let me check this for you real quick. Oh, we got Palantir earnings Monday. All right, Palantir earnings Monday.
Tuesday, we got some stuff too. Tuesday, we got Supermicro Semiconductor earnings, which is going to be kind of chaotic, I think, but we'll cover it. Wednesday, we got AMC and ARM earnings. So we got earnings next week almost every day again. Crap. It's all right. Thursday, DraftKings. All right, so we got some earnings next week and Rivian. All right, guys, I'm going to get out of here. Remember, the election's on the 5th. Remember, guys, I am terrible and I have no idea what I'm talking about. I'm going to be wildly wrong about anything and everything I say. Y'all be good. I'll see you guys later. Have a great day. Top 3 worst trader of all time leaving for the weekend. I'll see you guys next week.